Household income surged. The mainstream media celebrates. The economy is roaring back to life. Everything is fantastic. Or is it? Digging deeper, we can clearly see that the government is now responsible for more than 33% of all income. This is at an absurd level that some suggest is only temporary. Invariably, will have to rise far beyond during the next crisis and the one after that. You came here for the truth, so let me unveil that for you. Today, we're going to talk about bananas. That's right, here at the Money GPS, or the Banana GPS, as I like to call it, we're going to discuss what has happened recently. It is unbelievable. Look, you can look at the stock market, you could see what's happening with the jobs numbers, but it's never going to tell you the full picture. That's why I'm here to give you the truth, the reality of the situation. And people don't like it. People don't want to hear about it. But some people I know are actually interested in the real information. That's why we're going to get into that. I'm going to show you all the details surrounding it. I'm going to tell you about what's happening with certain economic factors. We are, of course, going to talk about the central banks, the interest rates, how I love to discuss that. Let's begin. Household income rose at a record pace of 21% in March as federal stimulus checks help fuel an economic revival that is poised to endure with an easing situation that's going on today. So they're suggesting this is going to, of course, be a temporary thing that's not going to need to be there next year, the year after, and so on, right? That's what they're saying. The 21% March surge in income was the largest monthly increase for government records, tracing back to 1959, largely reflecting $1,400 stimulus checks included in the fiscal relief package signed in March. The stimulus payments accounted for $4 trillion of the overall seasonally adjusted $4.2 trillion rise in March personal income. So let's be clear about what we see here. The vast majority of the money that's been going out there that's accounting for this is really just money from the government. Your tax dollars are being used to pump up basically everybody's bottom line. That's what's going on here. Now, you could say it's needed, you could say it's absolutely required, and this is something that they should do or they shouldn't do, whatever. That's the fact. That's the actual documented facts. It's right here. Spending was also up sharply, increasing 4.2%. The Commerce Department said that was the steepest month-to-month increase since last summer. Of course, they had to do this at this point here because they need to supercharge and turbocharge everything they can. They don't know any other way. Then I wanted to show you this chart on the left-hand side. In and out, you could see the government aid has boosted household income that helped drive a recovery in consumer spending. So right here, just looking at this, the consumer spending, that's the pinkish purple line here. And, there was a dip down and has somewhat recovered. But look at the personal income. There's a massive surge upward, and that is not personal income as if people got raises and people got bonuses and the economy is surging. No, it's money from the government going into people's pockets, the stimulus checks and all sorts of different programs that they have been putting out there. Here you can see the chart form at the top. I know it's a little blurry. It's U.S. personal income month over month. And then at the bottom there, you're seeing U.S. personal consumption expenditures. Anyway, just trying to show you the same information in chart form. If you're interested, note that from 2020 on, all the previous months before that, you just see these blips up and down. And now it's just off the charts in comparison. So there were big ups and downs in the previous years, but you can't even notice it today because of how much money is really going out there and all the exaggerated policies that have been taking place over this last year. Personal current transfer receipts. You could see that the surge in government spending today has made its way into different parts of the economy, different individuals. They're able to get the checks directly from the government and so on. We have this personal income excluding government handouts. It's not really much higher, basically the same level that we were at just over a year ago. So it's not as if things are necessarily better in that case. I just wanted to show you the fact that, look, if you pump a lot of money out there through the stimulus measures, quantitative easing, and so on, sure, that's going to show up in the statistics, but we have to identify where that money is actually coming from and realize that if it's a crutch, what happens when you take away that crutch? And this is the big one. Government transfer payments as a percentage of the total income. We are looking at, I believe the exact number is 33.8%, but heading on the way to 35%, as you can see in this chart right here. It is excessive on any level. Think about that. 1/3 of the income in the US is coming from the government. 1/3 of it. This is what they would call a banana republic. That's what we're saying right here. A banana republic. And that brings me to the Money GPS Insights. Here, we need to talk about, as an investor, the mentality that you should have, the things that you should be looking at. And right now, it is clear, it is obvious. They are going towards inflation. You've got quantitative easing on one hand, which some argue that creates actual deflation. It depends on the definition you are looking at. They're talking about price deflation, essentially, and maybe they're looking at specific assets and so on. It's all dependent on the terminology that you're going to use. But I want to note that when you print money, when you have this buying bonds and treasuries and all that nonsense, and it just sits in the account at the treasury and this and that, sure, that could create the bring the money velocity down and so on. But when you are actually using taxpayer dollars to give people paychecks and you are doing all sorts of stimulus packages and things, that makes its way into the economy, and that of course can circulate. And even though we are actually watching a devaluation of the currency, you could see what happens. If that's the case, if you believe that this is going to continue in the next little while, maybe there's going to be a 4th round, then a 5th round, then a 6th round, then 7th round, and you're going to have spending on all of these different things, we have to find out, where is that spending going? One of those places is the so-called green economy. Okay, you're looking at all the solar panels, and you're looking at the wind farms, and you're looking at the electric cars, and you're looking at all of those. They are going to see potentially billions and billions and billions of dollars just in the next little while surging towards them. Okay, so have your eyes peeled for that. Look at what the stimulus package is all about. Look at it and you will see some interesting opportunities. Even if these companies are failures, even if these companies do not live up to what they had actually claimed to be, they're going to be just flush with cash. Affluent Americans rush to retire in new life is short mindset. So this just, it's something that really happened over the last year. And I think a lot of people are starting to realize, life's not all about work. Life's not all about this or that. We need to be taking some time to slow down. I also think at the same time that you've got people who have made a lot of money in the stock market, particularly over this period. They've got enough cash to retire at this point. They don't believe that there's going to be another financial crisis in their lifetimes. So they can basically just retire on this because, hey, if the stock market's going to do 20-30% a year, they can retire and sit pretty. But I think that this is just showing us that there has been a big change just over this last year, not just in the economy, not just in the stock market, but also in people's perception. Looking to exit, dramatic jump in the number of business owners looking to retire. This is also important because if you have a lot of small businesses that are closing, what happens? Well, the big businesses simply come in. I think some of these people are just thinking, my store just, it hasn't gotten back to where it was before. We weren't in a good position. I think it's time. Let's just close up shop and we never open again. The big businesses, of course, will consume all of that. I thought this was interesting. I'm going to show you a couple things related to the inflation that's been happening today. Soaring lumber prices add $36,000 to the cost of a new home, and a fierce land grab is only making it worse. $36,000 right now. That's a big chunk right there, especially in some areas where the homes aren't didn't used to cost that much. Certainly, we are seeing a big spike in the price of lumber being just one of those particular, those commodities that are used in the building of a house. This is the chart directly, as you can see right here. I mean, I told you, buy 7, forget about the 7 shares of Amazon, buy 7 2x4s, and you are going to do just fine. You take the 2x4s, you stick them under the mattress, and you are going to do just fine. And guess what? It's been happening, and it looks like it's going to continue for the foreseeable future. So those 7 2x4s, that's the key. Palladium tops $3,000 for the first time amid undersupply. There are different reasons for this, of course, but this is simply one more that has been, performing incredibly well recently. Copper surged toward a record high, is hitting Chinese industry. You can read about the details if you are interested. Copper topped $10,000 a metric ton. And that's the first time in a decade and has been among the best performers in a scorching surge in metal prices. Chinese spot purchases weakened amid copper rally. So you can see the China copper spot premium, and look at what we could be entering if I pull the highlighter out here. In the previous instances, there was always this surge when it got to these bottom points here. So it looks like that could be the direction, at least for the foreseeable future. This article here is talking about Warren Buffett and how everybody's so upset at him because he is not into the ESG, as they talk about the environmental, the social, and corporate governance issues. Look, let's break it down really quickly. The whole world is apparently so upset at Buffett. Buffett himself said basically when he's gone, just take his money, put it into the ETF and let it ride. That's what he believes, because that's going to outperform, what he does. He's actually said that. He's actually made that clear. But look, the ESG, why doesn't he put his money into the ESG? Oh, he's such a bad guy, right? Because he doesn't care about the environment. No, because the ESG funds are all made up of Apple and Facebook and all these different tech companies. Okay? That's not what he's doing. He realizes, he looks at the actual balance sheets instead of simply investing based on, you got to have a good face for the company and so on. No, he's got certain metrics that he looks at and he's investing by those. The principle, you got to give it to the guy for at least sticking to his principles. Whether it's right or wrong, at least he's going by those rules. And I just wanted to show you this to give you an update on Justin Trudeau's hair. It is absolutely fantastic. Just take a look right there. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you are supporting me. I want to thank you for that. If you want to learn about e-commerce for free, you can do that at the AmazonGPS.com. If you want to know about the financial system, I'm talking everything, how to make money, how to reduce your debt, tax incentives, and so much more. Check it out at the link in the description. Have you seen this video yet? If not, you definitely want to check it out. Click on it and I'll see you there.